What's up, everybody? It's your boy Sat coming to you with today's stock pick, indicator help, and general investment tips. Remember, this channel is all about no face, just facts in 5. I do the research so you don't have to. Today we're talking about XLK, the Technology Select Sector SPDR Fund. And if you were sitting on the sidelines watching Dell absolutely explode higher today, this video is for you. Because let's be honest, we've all been there. You wake up, open your brokerage account, and see a stock you don't own up 10%, 15%, sometimes even 20%. Your first thought is, man, I wish I owned that. Your second thought is usually, did I miss it? Today, Dell reminded investors just how quickly money can flow into technology stocks when Wall Street gets excited about earnings, artificial intelligence, and infrastructure spending. But here's the reality. Most investors don't consistently pick every winner. Most investors aren't sitting around with perfect foresight knowing which company is about to explode next. That's where XLK comes into the conversation. Over the last year, XLK has quietly become one of the strongest performing sector ETFs in the entire market. While many investors were trying to figure out whether Nvidia, Dell, Broadcom, Microsoft, Oracle, or another technology company would be the biggest winner, XLK investors simply owned the sector and let the winners do the work for them. Think about what happened today with Dell. If you didn't own Dell, you missed the move. But if you're invested in a technology ETF like XLK, you're still participating in the broader trend that's driving these companies higher. That's one of the biggest advantages of ETF investing. You don't have to be perfect. You simply have to be right about the trend. And right now, the trend continues to be technology. Artificial intelligence spending is accelerating. Data centers are expanding. Cloud infrastructure investments continue growing. Companies are spending billions of dollars to build the future of computing. Whether it's Microsoft investing in AI infrastructure, Nvidia supplying chips, Dell building servers, or Broadcom powering connectivity, these companies are all benefiting from the same massive tailwind. Now let's talk about the chart, because XLK has been telling a very bullish story. Looking at the one-year chart, XLK is up more than 60% over the past year. That's an incredible move for an ETF. What stands out most is the consistency of the trend. Instead of a straight line higher followed by a crash, XLK has built a series of higher highs and higher lows. Every pullback has eventually been met with buyers stepping back into the market. More recently, we saw a period of consolidation where the ETF traded sideways and worked off some of its gains. That's actually healthy. Strong trends often need periods of rest before continuing higher. The exciting part is that XLK has now started breaking out of that consolidation range and pushing toward new highs. From a technical perspective, that's exactly what bulls want to see. The first key level I'm watching is the recent breakout area. As long as XLK remains above that level, buyers remain in control. The next thing I'm watching is volume. Breakouts that occur with increasing volume tend to be more reliable because they indicate institutional participation. And when institutions are buying, trends can last much longer than many investors expect. Another thing I like about XLK is diversification. If one company disappoints, it doesn't necessarily destroy your investment. If Dell has a bad quarter, Nvidia can still perform. If Nvidia slows down, Microsoft may carry the ETF. If software stocks struggle, semiconductor stocks can pick up the slack. That's a completely different experience from owning a single stock where one earnings report can make or break your position overnight. Now let's be clear. Owning XLK doesn't mean you'll capture every monster move. If Dell doubles, XLK isn't going to double. If Nvidia goes on another historic run, XLK won't move as aggressively. That's the trade-off. You sacrifice some upside potential in exchange for diversification and reduced company-specific risk. But for many investors, especially those who don't have time to monitor dozens of technology stocks every day, that trade-off makes sense. The biggest takeaway from today's video is simple. Stop focusing on the stocks you missed and start focusing on the trends that are driving the market. Dell's move today wasn't random. It was part of a larger technology and AI infrastructure story that has been unfolding for years. XLK gives investors exposure to that entire story. So here's my question for you. Would you rather try to identify the next Dell before it takes off? Or would you rather own a basket of technology leaders and let the sector work for you? Drop your answer in the comments below because I'd love to hear your thoughts. Remember, I'm not a financial advisor. I'm just a guy who loves stocks and helping people win at this stock game. Do your own research, manage your own risk, and never invest money you can't afford to lose. If you enjoyed today's video, make sure you smash that like button, subscribe to the channel, and drop a comment below of some stocks you'd like to see. This is Sat from Stocks by Sat 06, and I'll catch y'all in the next one. Peace.